Good morning, everybody. It is Tuesday, October 22nd, 9 a.m. Eastern. The S&P 500 is looking at a small gap up open, so the bulls are still keeping their control. And this morning, it's the tech sector that is leading the way. As we see, QQQ is set for a gap up open, and XLF is not. So the last 2 days, it has been very clear that the financial sector has been stronger than the tech sector. And now we're going to see, is the tech sector going to try and catch up a little bit and perhaps help provide that last little push to the all-time high, as where the S&P 500 stands right now. We are about 0.6% from an all-time high. Entirely possible we hit that today if we saw a pretty solid day on par with what we saw yesterday. And we've got earnings for Microsoft approaching tomorrow, which is also going to have a significant impact in the tech sector. So that'll be important to be watching. We've got Apple going for a new all-time high today. As long as Apple keeps hitting those all-time highs, we know the sector bulls in the tech sector are going to remain confident. So daily high or low established on SPY at 296.99. That's now our most important support level for the week. We are breaking the top of this move, 324, and looking back at that all-time high. As I've said in recent videos, if the S&P 500 breaks all-time highs and we don't see XLF break its recent resistance or QQQ break its all-time high, meaning if only one of those sectors goes with SPY to break that resistance, we know that the SPY bulls are not going to get very far. If we're going to see a convincing move, we have to see XLF hit its 52-week high, and we have to see QQQ hit its all-time high, and then we'll look for follow-through. Whoa, Netflix. Let's see what that means. Big dump on Netflix pre-market. So some kind of news just hit. 269 support still holding the low of yesterday at this point, and that was very short-lived. We'll see. It's still bouncing around here, reacting to whatever that is. So the dollar. The dollar is a potential daily bear flag at this point. Even if we do get follow through, we know we're just looking for a daily lower high to be set, because anything under 98.65 is a daily lower high. So bears in control and comfortable on the dollar. Gold is still sideways. Again, I am just hands off. Hands off gold as long as we're within this range. Look at this 1 day's range, and we have traded within this now 7 days in a row. So it's just tight and sideways and patiently waiting for clarity. Silver is the same, sideways range, not as tight as gold, but definitely in the same ballpark of sideways trading. We've got oil trying to make a bull break. Oil is going to be very interesting for its inventory report tomorrow. We've got our high of the bull move, low, lower high, higher low. So the range right now is 52.70 to 54.60, about a $1.90 range. And we will look for a break potentially tomorrow in reaction to the inventory report. And if we get a bull break, it's only going to add a bit more confidence to the S&P 500 bulls that are looking for that all-time high. Because again, the fact that this is a weekly bear flag at this point is a bit concerning to market bulls. But if we see a break of our recent high, we'll start to try and negate this weekly bear flag, and that will give the bulls a bit more breathing room above our must-hold 50-51 support. Natural gas. So we're looking for a 4-hour lower high to form on this bounce, and we are currently rejecting from the 4-hour exponential resistance, but we know we need a 4-hour trend change if we're going to see the daily higher low and our right shoulder start to form on this potential inverse head and shoulders pattern. So we will look to top out. We'll have to pull back and hold 221 and then see continuation for confidence in that pattern. And we got Bitcoin also still trading fairly sideways. Now it's the 4-hour time frame that we are watching, where we have our high and low, and we've been trading within this range for a couple days at this point and patiently waiting for a break of this range for clarity. So let's see, Roku news is impacting Netflix. Roku dropping a bit, not nearly as much as Netflix. All over the place for reaction. So one thing that does tell us, thanks for posting that news, is that Netflix and Roku will definitely have volatility once the bell rings here in 25 minutes. And we'll check in on those right before the open. So we'll be watching Roku and Netflix this morning. We'll also be watching the S&P 500 hourly time frame. As we know, as long as the hourly uptrend remains intact, the bulls are in full control. In extended, or I should say in regular trading hours, 299.41 is our most recent support. So as long as that level holds, the bulls keep complete control in the market at this point. Again, we're approaching levels where top fishing plays with the all-time high do have potential, but we know the odds of getting stopped out right now are probably fairly high because the market bulls are keeping their full control. So it'll be a low-risk trade, but definitely want to keep those stop losses in place in case we do see a new all-time high and some solid follow-through from those bulls. We'll still be watching the falling wedge on the bear miners, or I should say on the bull miners. We're going to be watching support down at 26.18. The low of last week will be a key support the next few days on these miners. And again, even if we break to a lower low, as long as that bear break does not see significant follow-through, we will still be watching for the potential of this falling wedge to be in play. Also going to be watching the MJ sector. Canadian MJ has to see follow-through and has to break the highs of yesterday if we're going to be confident that our daily higher lows are formed here. So ACB trying for a daily higher low, APHA, Cron, everybody's trying for a little daily higher low, and we have to break the highs of yesterday for us to have confidence to say, yes, our daily higher lows have now clearly been established. So let's get into tickers, and we'll start it off with NVDA. So NVDA daily higher low has been established at 187.50. And we're now looking up at recent resistance of 199.29. And we're going to be testing that first thing with a gap up open. So if we break 199.29, we have just continuation of the daily uptrend. 200 psychological resistance would come next. And this is the highest price we've seen in quite some time. Next price level after 200 psychological is 206.88. So daily uptrend continues. Bulls keep full control, and anything on the hourly time frame above 194.82 is an hourly higher low. PFE. So definitely a weekly equilibrium worth watching over the next few weeks. We have our low, high, higher low, and now we're looking for a lower high compared to 37.76. And losing the daily uptrend will be the indication that the weekly lower high has been set. We're looking for a daily higher low to form right now. Pretty much anything above 35.98 will do it. But if we do lose that daily uptrend, that's when we say, okay, our weekly lower high has been set, and we would then look for a weekly higher low compared to 34.60. So IAN, certainly no bullish entries at this point, if not already in a position. As we are extended, we have not changed the daily trend, and we've pretty much gone 40+%. We've gone over 50% now from the low with no daily consolidation. So we know we don't want to be chasing here. But if in a position we have the hourly uptrend as a guide, we didn't consolidate on the hourly. We do have one support level at 222. It's not an hourly higher low. It is a 15-minute higher low if we zoomed in. Let's do it. So there's that support. But if we see an inability to break, pretty much we're looking for hourly consolidation at some point today. Whether it's an inability to break 237, the high of yesterday, and then we pull back for an hourly higher low compared to the low of yesterday, or whether the bulls do break that resistance, but again, they will be overextended, and we know that hourly consolidation will likely be needed at some point today. When we lose the hourly uptrend, we'll zoom out to the daily and we'll look for a daily higher low to form. And there are going to be a significant amount of bulls, in my opinion, that are going to be looking to enter some positions or add to some positions on that daily higher low. So nice to grab some attention yesterday for the IAN bulls and just watching to see how much upside we can see from here before the temporary top is hit. PG. So daily bounce underway, but anything under 124.06 is a daily lower high. So we're not changing this daily trend anytime soon. But the bulls are creating some nice space for a higher low to form. And I take that back. We must have earnings reaction here, taking us right up to that resistance level. So 124.06, again, we're not going to change the daily trend, but we're going to take out all kinds of resistance levels. We will need a higher low and higher high once we top out from this earnings reaction, but we're right back up at that all-time high. So 124.06, and if that level breaks, 125.36 is the key level to look for new all-time highs and a lack of resistance after that level. If we were going to see profit taking on the open, the most important support levels for me would be 124 psychological here. That's just a little base. If that level were to break, we would likely see some more profit taking. And after 124, we would look down at 122.51. So if the bulls want to keep confident and complete control once the bell rings, holding 124 would be the goal of those bulls. MU. And we certainly know that the next time PCG or PG consolidates on the hourly, we will be looking for an hourly higher low to form. So MU, we are watching for the potential of a right shoulder to form on a head and shoulders pattern on the weekly time frame, but we're not going to set the weekly lower high until we lose the daily uptrend, and that daily uptrend is still intact. So our new daily higher low is 43.23. The bulls are going to have to see a bull break of 46.55 if we're going to see continuation, and a bear scenario would be, let's see, we're trading at 45.47, but a bear scenario would be if we were unable to break the high and then we roll over and lose the daily uptrend, the head and shoulders pattern on the weekly is a lot more likely. If the bulls are able to keep this uptrend and we see continuation, it could still be a right shoulder on the weekly time frame, but the odds would decrease because the bulls would be creating more space to work with to potentially form a weekly higher low once we do top out. So it's all about the daily uptrend for now, and when that daily uptrend is lost, our right shoulder may still be forming on MU. And of course, if the S&P 500 keeps its strength and slow and steady bull moves through the rest of the month in all-time highs, we know that that MU right shoulder would be less likely. GWPH, so it's a weekly bear flag still possible, and we can say that because the daily trend change is still just not giving us a whole bunch of confidence. Bull break straight into consolidation. It's still a higher low pattern, so it's similar to MU in that regard. We have a daily uptrend. Our higher low is now established at 115.68 on the daily. When we lose the daily uptrend, our weekly lower high has been set. So if the daily uptrend were to be lost anytime in the near-term future, that weekly bear flag is absolutely in play. But if we keep following through for these bulls, they want to break 123.13. And if we can keep slow and steady move, again, just creating more and more space for the bulls on the weekly time frame and trying to negate that weekly bear flag, I would need to see a bull move all the way up to 130 if I'm going to look at this as a bear flag negated. So bulls have proving to do. Biotech sector seeing strength this morning with BIIB. Let's go into that real quick. So BIIB, big bull move. And what that is doing is helping the entire biotech sector. So look at XBI. XBI is setting up for a solid gap up open of about 1.2, 1.4% or so. And that is playing catch up. XBI has been the weakest sector comparative to the tech sector and financial sector recently. And this is going to be a nice little catch up boost. And we're going to likely see IWM respond to that as well, although not as significantly. So we'll see if GWPH correlation to the biotech sector can see some benefit from that. BYND. So still trying to get a bounce going and still weak. And we're going to be watching the range from yesterday. So here it is on the half-hour time frame. Our equilibrium, 111.25 and 112.18 are two resistances. And our supports are 109.52 and 108.57. So that is the half-hour range that we're going to be watching first thing, and we'll look for a break. If we break the equilibrium bearish, we look to the low of the day. If we break it bullish, we look to the high of the day. And we know that even if we do start to see a daily bounce, we will just be looking for a daily lower high to form as well, as the bears are strong. IIPR, trying to get a bounce going on the daily chart, looking for a higher open. So we have, you could call it an hourly trend change, not crystal clear, but 73.47 breaking means there's a lack of resistance, so we will zoom out and we will look for a daily lower high compared to 80.40. Anything under that level keeps the downtrend intact, and just a short-term oversold bounce at this point until we can change the daily trend, which is going to take a little while if that's going to end up playing out. Amazon, I'm watching for the potential of a 4-hour equilibrium. If we cannot break 1794 this morning and we start to pull back, we'll have our high, low, lower high, and then we'll look for a 4-hour higher low sometime over the next couple of days. So it's all about that resistance first thing, 14, make that 1794. And short-term support is 1780. So fail to break 1794 and break 1780, and that 4-hour equilibrium will be in play. Apple all-time high coming, likely. 241, 242 would be the next level we look to. hourly higher low to keep the bulls in full control is 240. And it's 240.03, but in that scenario, I will always round down to the psychological level. W day. So W day with a gap up open coming, which means our daily oversold bounce is getting going with the inside bar bull break. So we know a daily lower high is coming as well, but the bounce is getting some follow through on the daily chart. Anything on the hourly above 153.96 is a higher low, keeping the bulls in control. So they now have some space to work with on this hourly uptrend. And the next resistance level after the high of pre-market, so 158.50, and then we're going to be looking up at 158.63, which is more important. So we'll just say 158.63 and 160.66 as the next two resistance levels. We'll see how long the bulls can keep this daily uptrend in their favor. GNC, also a gap up open coming, 245, so daily higher low established. So we had... I'm just viewing this as low, high of the bull move, higher low, higher high, higher low, and now we're up in the 240s. If we can't break 283, we'll look for an equilibrium to form. So failure to break 283 and then losing the hourly uptrend means look for this kind of setup. But if the bulls can keep the hourly uptrend, then they'll certainly keep control. So on the hourly chart, short-term support will be 234 and 223. There's our 234 support, 252, 260. So we can look at some pre-market levels of resistance as we head into the open. But the key... Oh, I was looking at the weekly time frame. So bigger picture, 283 is key resistance. And the bulls are now setting our weekly higher low with this gap up open. HAS. So daily consolidation and certainly a lot of volume on that pullback yesterday, and there's a gap down. So profit taking into the gap down open. I'm assuming that's an earnings reaction, but someone was headed to the exit before earnings came out. So we're trading down at 101, which means a big drop. 103.04 was our only nearby support, and after that, there is a lack of support. So 100 psychological, 98.82 are the next two levels on the 5-minute time frame, just a clear downtrend, and we'll have to change the 5-minute trend for any kind of hourly bounce to get going. But any bounce at these levels, we will just be looking for a 5-minute lower high to form. So looking like a potential battle around 100 psychological once the bell rings this morning. So Netflix with this reaction, it's a lower open coming. So the daily bounce started yesterday, but we did not change the hourly trend. We had the low, high of the day, higher low, no higher high, and this is obviously a setback now. So we can look at it like pretty much 269 is the only short-term level nearby. Bulls are going to be looking to hold 269 today. Their goal for today is now just a daily inside bar. They just want to hold 269 support. We have a 2-minute equilibrium to be watching. High, low, lower high, higher low, watching for a lower high. So a little 2-minute tightening range that will likely break right after the bell rings. But it's all about 269 support, and resistance will be 280. APHA. So again, all Canadian MJ Bulls have to break their high of yesterday if we are going to see any convincing action that our daily higher lows have set. So the best case scenario for the APHA Bulls is an inverse head and shoulders pattern here, but we need a 15%, 10 to 15% move to see that happen. So it's not going to happen overnight here. We have to see a break of 490 today for our daily higher low to be established and to shift our focus back up to the 553, 554 double top. So it's all about 490. Then we'll look to 5 psychological. And the hourly time frame, we will need a clear hourly trend change, which we don't have yet. And if you use extended hours, you could say, yeah, if we break 490, that's an hourly trend change, but not the ideal convincing kind. I prefer if it all occurred during regular trading hours with real volume. Either way, it's a key resistance test first thing for the sector, and if we reject, you better believe that bears are going to jump on that, and bulls are going to bail on their short-term bullish attempts at positions. Roku. So the reaction initially all over the place, but a little bit bearish now. So we closed yesterday at 133.03, so slightly lower open, but we will be looking for a 5-minute lower high compared to the top of the reaction, 133.80. Let's see if we trade within the range of this 5-minute reaction candle to start the morning. So 133.80 key resistance, 131.20 key support. That's the initial range that would have my attention. And then from there, we would look at the daily inside bar. Depending on which direction we break, that 5-minute candlesticks range from pre-market. MPC. So MPC is still strong, but looking like, I would still say the hourly uptrend's intact. This is the hourly higher low for me at 64.45. Anything above 64.45 is still an hourly higher low. If we were to fail to break 66.05, set an hourly lower high, and then drop down to a lower low, that tells us daily consolidation is underway. And we would look for a daily higher low compared to 59.56, which is our last daily higher low. So pretty much worst case scenario for the bulls is daily consolidation would be underway, looking for a higher low to form, and the bulls have space to work with to keep their daily uptrend. Bigger picture, weekly chart, breaking resistances. So a shift in momentum, bull cross of the exponential moving averages for the first time in a long time. And we'll see how long the bulls can keep this daily uptrend in their favor. XBI. So XBI, we have the gap up open, likely. 81.25, 81.11, two little short-term support levels from pre-market, but pre-market doesn't have a ton of volume. I would be watching BIIB if you're trading the biotech sector, and the reason we're seeing a gap up open is because BIIB is seeing strength. Watch this 5-minute equilibrium. This is why we have multiple monitors up, because if I'm trading XBI, I want to know what BIIB is going to be doing. If it breaks this pattern bearish, then the odds that XBI is going to see profit taking on the gap up open would increase. And if it breaks it bullish, then the biotech sector will likely remain strong. So the reason, one of the major reasons for the bull move, we definitely want to keep an eye on it to know what it is doing in terms of any other further correlation we're going to see once the bell rings. So key resistance on XBI from here is not going to be crystal clear. We're up in the mid 81s. So we're looking at 82.08 as the next level. We are definitely in an area with a lack of resistance, but still looking for that weekly lower high, anything under 84.12. ETN. So ETN, we've got resistance at 84.04. 84.05, so a little double top there. Let's see, pre-market. Those levels are in play. So after that double top, we'll look at 84.29. There's a bunch of resistance pretty much every day. The high of the day back here from September is a resistance level to be watching. Hourly uptrend, bulls are hoping that 83.21 is the hourly higher low, and we'll see if they can see a bull move over that double top. 84.04 and 05 will have to break for continuation. OKTA. Hope that's not a review of my morning analysis. So OKTA, we've got not a daily inside bar because we did break the low, but not significantly. The bulls are attempting a bullish reversal candlestick. No hourly trend change yet, so whenever we top out, we have to pull back, hold 96 on the hourly, and then change the hourly trend for us to be confident that this bounce can have follow through. And on the daily time frame, anything under 120.62 is a daily lower high. So it's the weekly time frame holding support and the bounce trying to get some follow through from that support hold on the daily chart. But we need an hourly trend change to have confidence that that bounce can see a bit of follow through. So next resistance will be 104.87. F with the gap down open, or actually, nope, it was a higher open yesterday. No, it was a lower open yesterday and a weaker close. That candlestick threw me off a bit. So we're going to be opening right near the low of yesterday. 9 psychological will be support. And then we're going to look down at 878 after that. So the hourly uptrend has been lost. And we can pretty much say that any bounce that we look at, anything under the high of yesterday, is an hourly lower high. So the bears have momentum in their favor. We would have to see an hourly trend change for a shift in momentum. And we're looking at the weekly downtrend. So I look at this daily chart and I just see, not a ton of clarity. Big upper wicks and this little higher low that we lost. Some odd candles. But then I look at the weekly and I say, okay, that's very clear. We have a loss of the weekly uptrend, and now we're seeing weekly lower highs and lower lows. So anything under 965 is a weekly lower high, and the most important support is 844. So the point is just zoom out whenever there's a lack of clarity and things become a lot more clear. So if we see further weakness on this daily chart, that's the potential indication that our weekly lower high has been set, and then we'll head back down towards the upper to mid $8 range to try and set a weekly higher low. Facebook. So Facebook looking for a gap up open as well. Actually, we're right at the high of yesterday. So 190 high of yesterday. And again, just rounding a little bit. So 190 will be key resistance. 190, 149 will be after that. It's the same setup as Amazon, where if we can't break 141, if we can't break 190, 149, it's a 4-hour equilibrium setup. So high, low, if we fail to break it and then start to pull back, we'll have the 4-hour equilibrium to be watching into the middle of the week. So it's all about 191.49 resistance for the Facebook bulls. DIS, bull move here, 133.44 resistance. So bulls trying to negate the weekly bear flag. It's definitely a weekly bear flag, but with this higher open, it's going to be less likely. If we get over 133.44, we're looking up at 134.15 as the next level. And bulls just want to keep this little daily uptrend intact as long as possible to keep creating space on this weekly chart, as it's a very weak weekly bounce at this point. We'll see if the bulls can hold on to those gains from pre-market. TSM. TSM, daily high or low, anything above 46.24. Looks like a small gap up open may be coming. So if that's the case, the daily inside bar breaking bullish over 50.11 and 50.09 would tell us our daily high or low is established at 49.13. And then we're looking back at resistance of 51.21. So those are the most important levels on the daily chart as the bulls try and continue their uptrend. Breaking 50.11 is the first thing the bulls want to pull off. And then 51.21 is the next key resistance level after that. Lunch with Lori will be live at noon Eastern. Thanks for the reminder. TRST. So low of 115, high of 208. Again, tons of risk on this name. But a daily trend change attempting here. We have to hold 115 and break 208 to change the daily trend for the first time in a very long time, in which case we would zoom out and just look for a weekly lower high to be set. So 162 is now the must-hold support. 184 is a short-term resistance. And the daily chart is all about 208. So it's actually correlating to the rest of the sector in the sense that we're trying for the daily high or low. Have to break the high of yesterday today for the daily high or low to be convincing. And then, of course, we need the daily trend changes from there. I made a good joke about a ticker. Nobody said anything. So high open on SPY. We're up. It's pretty much just that all-time high. That's all we're looking at from here. So we got the open coming in just a minute or two. Going to welcome Ben Burgess to the group. All right. So we know that all the momentum is with the bulls in the market right now. It's up to the bears to derail that momentum, and we will have to see losses of hourly uptrends for that to be the case. We got a nice 5-minute uptrend on SPY to be watching as well. Short-term support on SPY will be 346. If we lose the 5-minute uptrend in any convincing way, we zoom out and we look for an hourly higher low to form compared to 299.59. So there's the open. Again, tech sector strength, financial sector slight weakness. Let's see if BIIB, which is influencing the biotech sector, can hold its gains. If we break the lows of consolidation here on BIIB, could potentially have some downward pressure on XBI. Again, we're watching the MJ sector, which needs to break highs of yesterday. We've got IAN trying to continue its strength from yesterday in the MJ sector after the high of the day of 237, currently a double top. So we have to be cautious of that double top because if it doesn't break, that's likely a good catalyst for some consolidation. So SPY Bulls holding on just fine on this 5-minute uptrend. Let's check in on Roku and Netflix, which had those reactions to earnings, or not earnings, a reaction to news first thing. So Roku's still looking for an hourly higher low to form. I'd say short-term support is 132.05 from a little consolidation yesterday, and resistance will be the high of yesterday, 135.35. And Netflix is recovering as well from that drop. So Netflix dropped down to 270, and here we are bouncing a bit. Anything under 278.54 on Netflix we'll look at as a 5-minute lower high from where we dropped from. XBI Bulls, big, up 2%. So still holding on to those gains for the biotech sector. Nice little dip buy and up over the high of pre-market. So continuing that strength. So we got we have the exact opposite of what we've been watching on Friday and Monday, where the QQQ is holding up near the high of the day and XLF is at the low of the day. So a little bit of a role reversal between the two sectors. Apple hitting its all-time high, 242 psychological resistance from here. VFF in the MJ sector is breaking its high of yesterday. So again, all individual names want to see that happen. And actually, I take that back. It's a double top to the penny. We need one more penny to break that high. Oil bulls. Nice green day. Watching that key resistance on oil. There's a potential top fishing play on oil with 54.60 resistance, which we will reject from if we are to remain in this daily equilibrium until the earnings report, or I should say the inventory report tomorrow. BYND, lots of volatility. Got to be cautious of the big bull moves with no follow through. We do have the half-hour bull break. We're now looking at 112.18, which broke, and then the high of yesterday, 113.61 as the next level. If we're going to see any follow through on this bounce. So let's see if Netflix gives us a little 5-minute equilibrium or 2-minute equilibrium with pre-market levels, as we are setting a lower high currently. Again, Amazon and Facebook, if they cannot break those resistances, both are very slightly red, but if we can't break those resistances on the 4-hour time frame, those 4-hour equilibriums are going to be the setup for the next couple days. CGC bulls trying to break their high of yesterday. So we're looking at 20.57, which is currently a double top to the penny. We will need a bit more convincing follow through. Roku bulls up near the high of the day, that resistance is going to be the high of yesterday, 135.35 being tested right now, approaching. So continuation for the QQQ bulls up at the high of the day. XLF just trying to find a bottom. Let's see what the hourly time frame looks like for XLF to see if this consolidation is remaining healthy. Short-term hourly support is 28.40, which did break by a couple pennies. So we may be due for some financial sector consolidation after a big gap up and bull move yesterday. The low of yesterday is 28.34 about to be tested. We'll see if the bulls are able to hold that level. SPY down at the low of the day. So SPY is losing the 5-minute uptrend from pre-market. Most important level for me will be the hourly, little higher low at 299.59. If that level holds, the bulls don't have much to worry about. And we'll see if XLF can hold that low of yesterday. If 28.34 breaks, then we know SPY weakness can continue. So there's the break of that level on XLF. So daily consolidation underway to try and form another higher low. And there's a gap to fill on XLF now at 28.22. So there's little support between 28.34 and 28.22. Now the question is, can the tech sector maintain green and try and offset the financial sector weakness, which is the role reversal of what we've seen the past couple days with the financial sector holding up while we've seen weakness in the tech sector. So CGC double top at the high of yesterday. Definitely not an ideal start to the morning. Bulls must break that level with some conviction. STMP after the bullish news yesterday, giving back a good bit of that move. So we're going to be looking for an hourly higher low to form, but there's just no support nearby to be going off of. Currently, the low of consolidation is 87.50, and we'll need a 5-minute trend change for the hourly higher low to be set. Netflix fading back down to its low of pre-market, and then we got that low of yesterday. So 270 is the low of pre-market, and 269 is the low of yesterday to be watching. Best case scenario for the market bulls this morning from here would be to see XLF change its 5-minute trend back to the bulls after this morning profit taking. Currently seeing a 5-minute oversold bounce on XLF. So still keeping an eye out on Facebook and Amazon for that 4-hour lower high in equilibrium, but we would have to see weakness in QQQ as well if that were going to get any follow through. QQQ still in a fairly tight range since the bell has rung, but we are testing the low right now, just above it. IAN double topped at the high of yesterday and is seeing profit taking. Amazon low of the day. So every time we hit a new low on Amazon, the odds increase for that 4-hour equilibrium. Same thing for Facebook. Facebook is testing the low of the day, as is QQQ. New low on Facebook. Roku big bull break. So over the highs High of yesterday has broken, and now we're looking at our recent high of 139.59 as resistance. If we were to run up straight to that level from here, we will be pretty darn extended on the 5-minute time frame. But the bulls are seeing increasing bull volume from one 5-minute candlestick to the next to start the morning, which is not your normal pattern and definitely shows solid bull volume on this move. But that 139 resistance is the next level to be watching. So bull miners are starting with some green as SPY is pulling back a bit first thing. Low of yesterday on NUGT was 26.64. Low of today held that level by 13 cents. Short-term resistance 27.30, 27.38. Bulls want a bit more convincing follow-through over that level. SNC on the TSX, 1867, key resistance being tested. If we break that level, we change the daily trend, which would mean zoom out on the weekly. And we would be cautious on the weekly chart because anything under 21.18 is just a weekly lower high. But trying for that daily trend change, which we just got by breaking resistance. Need a little bit more convincing follow through. But then it's up to the bulls to change the weekly trend by getting over 21.10, which is still a long ways away. So QQQ double bottomed, which is keeping the bulls in control there as long as that low of the day holds. And now the bulls want to break the high of the day to see continued strength. Again, if QQQ does see a new high of the day, we know that even though Amazon and Facebook showed us a little bit of weakness and we have that bigger picture 4-hour equilibrium pattern, we know if QQQ holds strong, we're not going to see bears get any kind of significant follow through on those names. So we want to see the sector momentum at the back of the direction we choose. So that would just keep us a bit cautious if we don't see any weakness in QQQ. And we have seen a pretty nice bounce on XLF, giving some space, but we will still need the 5-minute trend change there for the bulls to be back in short-term control. CMG, with earnings so close, there's not much. I mean, we made a key bull break on the weekly time frame. Normally, we would be looking for all-time highs in the next few days. And if we have a bullish reaction to earnings, we will certainly see all-time highs. But there's very little time left. So the bull break today over 851.80 is just continuation of the weekly uptrend. And the only resistance is the all-time high at 857.90. And now QQQ is pretty much giving us a double top and a double bottom. So 2-minute tight range to be watching. NVDA bulls are having a great day. Over 200 psychological, daily continuation in a big way. Broke resistance of 199.29 and saw a lot of follow through first thing very quickly, but we have pulled back pretty significantly from that high of the day. But we are in an area with a lack of resistance on the weekly time frame for NVDA. As soon as we cleared 193.47, we are in a lack of resistance zone, and bulls see easy movement in that scenario. And today is a bit of an example of that. BIIB is still sideways from its pre-market range. And so is XBI. We had support at 81.11, 81.25. The low of today is 81.22. So XBI is looking like a 2-minute equilibrium now. Looks like we just held that low of the day. Double bottom at 81.22, 81.26. NVDA is a tight 2-minute range. XBI, tight 2-minute range. QQQ, tight 2-minute range. And that was the case yesterday. We had a lot of individual names with little 2-minute equilibriums to be watching in the first 30 minutes of trading. And we are getting some more of those this morning. SPY Bulls recovering with XLF seeing a significant bounce from its 5-minute oversold conditions, and QQQ testing its high of the day again. And there's QQQ with a new high. So that's only going to help the SPY Bulls, but that's one of those scenarios where, okay, we see SPY pulling back, we see some weakness, we have XLF at the low of the day. Is QQQ going to hit the low of the day? And it double bottomed, so the answer was no. So the SPY bears don't get any follow through. So we know the bears have to break QQQ's low of the day if we're going to see any follow through. Amazon is set up for those bears in the sense that Amazon is remaining weak. You can look at Amazon and Facebook diverge. They're in the same 4-hour setup. Amazon is way weaker on the 5-minute time frame than Facebook is. Facebook responded very well to QQQ's new high of the day. Amazon is not responding at all. So if QQQ were to break the low of today at some point this morning, Amazon bears are going to be positioned well for that. And Amazon is definitely setting up for that 4-hour equilibrium. Low of the day on CGC after that double top at the high of yesterday. So that inability to break resistance definitely leading to a pullback. And the failure to break the highs of yesterday on Canadian MJ names aside from VFF first thing this morning. Definitely a bail signal. So trimming some positions for myself personally to remain protective, but also anticipating hourly higher lows still likely to form on names like APHA and ACB. Although APHA is definitely holding up a bit better than ACB. So that new high of the day on QQQ didn't get any follow through. Watching to see if we break the low of the day. 194.01 key support. Good bit more profit taking on XBI as we have broken. Oh, take that back. Not yet. We're testing it again. Still in its tight 2-minute range. So BIIB key support is 295.51 and 294.10. QQQ back to the low of the day as Amazon's 5-minute RSI is just now getting oversold. SPY's a double top at the high of the day by 2 pennies. So there's QQQ with a very convincing new low of the day. So a fake out high of the day, a new low of the day. Amazon bears loving that. As are the Netflix bears. Netflix is now below the low of yesterday. So no bottom on Netflix yet since earnings. Now eyes shift back to the financial sector. Can the financial sector see a new low of the day for the SPY bears to get any follow through? So we'll look for an Amazon 5-minute oversold bounce in the near term, but we will just be looking for a 5-minute lower high. As far as the 4-hour equilibrium is concerned, the bulls are looking for a 4-hour higher low compared to 1749. This is that setup that we were looking for. Inability to break resistance in the 1790s meant a lower high, and now we look for the bulls to attempt a higher low. And Facebook, you can see it's a similar setup, but the bears are not getting anywhere near as much follow through on Facebook on that lower high yet. XLV breaking weekly resistance is a great sign for the bulls. We will still need a weekly higher low and higher high for a trend change, but certainly tons of space for the bulls now on this weekly chart. Bull miners still up, testing the high of the day, keeping strength. Roku pulling back fairly significantly from its high of the day. We're looking for a 5-minute higher low on Roku. Roku has been great for giving us really wide ranges of volatility in both directions these mornings. OSTK on the daily time frame. Inverse head and shoulders is still in play, but now 1065 is a must-hold level on that daily time frame because that's the low of the right shoulder now. So it's up to the bulls to see some green and try and head back up to a 1215 resistance, as 1065 is now the must-hold. Still a little double top from the high of yesterday, 1130 and 1132. So we'll be watching 5-minute exponential resistance on this Amazon bounce attempt. 5-minute RSI down in the low 20s. And XLF, we have high of the day, low of the day. We're looking for a lower high to be set on this bounce. The question is XLF a 5-minute bear flag? And if it is, and if we break the low of the day on XLF, now the QQQ has already broken its low, then we're likely going to see SPY go red. So natural gas bulls looking good as far as this 4-hour bounce, that play for the right shoulder and the daily higher low, trying to follow through. Natural gas is pretty much going to give us a daily inside bar sure thing today. So again, we need the 4-hour trend change, but the bulls are creating nice space. So we have our low. We'll look to top out on the 4-hour time frame compared to 235.4, and then we need the 4-hour trend change for this inverse head and shoulders to end up playing out. 4-hour trend change will be needed. Pretty much ideal scenario for the start to today for those bulls. New high of the day on the bull miners. Wow, NVDA gave it all back. Very quick bull move, straight into a low of the day, straight into... Now we're watching a gap fill on the daily, 196.55. So just peeking in on the bull miners daily time frame for GDX, daily inside bar forming. If the daily inside bar were to break bullish tomorrow, our daily higher low would be set, and we would have to break 27.35, the high of last week, to be a daily trend change. So XLF has my attention from here. Still fighting 5-minute exponential resistance. Amazon, we're looking for that 5-minute lower high on this oversold bounce. QQQ will be looking for a 5-minute lower high compared to the low of the day, or compared to the high of the day, I should say. GBPUSD daily chart in a breakout. So we're in one of those patterns with a higher low every single day for the last 9 days. When that pattern is lost, we look for weekly consolidation. So right now, the most important support today is 1287. If today forms as a daily inside bar, the low of today will then be just as important tomorrow. So compare GBPUSD. Compare this daily chart to Tesla and what happened to Tesla when we lost the pattern of a higher low every day for 10 days. That led to daily consolidation, and we'll be looking for the same thing once we lose that pattern here on this name. Canadian MJ Bulls still sticking around, still proving to do, but VFF and APHA standing out as a little bit stronger. Still all about the highs of yesterday. Financial sector trying to fend off the potential 5-minute bear flag. Amazon's 5-minute bounce getting some decent follow through. Oversold 5-minute bounce. RSI has cooled off now on the 5-minute time frame. XBI is a really nice 2-minute equilibrium. Keep holding that low of the day. Short-term resistance is 81.68. M is also trying for a little short-term bounce. We're just looking for a 5-minute lower high on M. And we saw a higher open into a lot of profit taking, breaking the low of yesterday. So we'll look for a 5-minute lower high here, and then support will be 15.14 and 14.90, as the weekly time frame is still weak and still clearly in a downtrend. MPC is a 2-minute equilibrium as well. Looking for a higher low compared to 64.86. And it's a daily inside bar as well. So again, the pattern of a higher low each day, the last 4 or 5 days. How that 2-minute equilibrium breaks depends if we're going to be looking at the high of yesterday or the low of yesterday as the next level. If we break the 2-minute equilibrium bearish and break 64.67, then we look for a daily higher low to form. But I would just be focusing on the 2-minute time frame at this point and patiently waiting for a break, just like the XBI traders are doing. So XLF, decent bounce. If we can't break the high of the day, 28.47, we'll have a 5-minute equilibrium on XLF, and at that point, there'll be tightening ranges pretty much everywhere. little bit choppy, which is why I would be gravitating to the nice clear equilibriums. QQQ has been a bit choppy. SPY has been a bit choppy. Just at the fact that they hit a new high of the day and then quickly pulled back pretty hard. CGC bulls trying to creep their way back to the double top test of resistance. APHA is testing the high of the day, as is ACB and Cron. APHA is going to have to break 490, the high of yesterday. BIIB still sideways. So we are holding some 5-minute supports from pre-market. The bears have had control since the bell has rung, but we haven't broken those pre-market support levels, and now we're going to be watching if we get a little bit more bounce follow through. Key resistance will be 318. We'll be looking for a 5-minute lower high compared to 318. And looking for what time frame I like this best on as far as for clarity. I'd say 15-minute. 15-minute equilibrium with our higher low at 295.40. The bulls are hoping that 366 is our new 15-minute higher low. And resistances are 318 and 320. So after 2 very strong days in a row, both Friday and Monday, the XLF bulls are certainly buying that first 5-minute oversold bounce. But if we can't break that high of the day, 5-minute equilibrium will be on watch, and that could play out into late morning. BA is setting up for a 5-minute equilibrium. The range between the high of the day and the low of the day means we're looking for a 5-minute lower high to be set. And then on a pullback, we'll look for the low of the day to hold for a 5-minute higher low attempt compared to 334.46. So just using the morning's range as a guide. SPY just hit a new high of the day, but again, no follow through, as none of our major sectors hit a new high of the day. QQQ, 5-minute lower high looks set. We'll see if the low of the day can hold. Again, SPY, if you were only watching SPY right now, it's just full of fake outs as far as new highs being hit straight into big pullbacks. But the details are in QQQ and XLF. XBI is still tight, but heading down towards its lows. We'll see if the bulls can hold that support yet again. VFF, again, just the standout Canadian MJ bull on my screen, slow and steady. New high of the day just hit. The next daily resistance is 781. Amazon looking like our 5-minute lower high has been set. Amazon bulls will have to hold the low of the day and break 1778 to change the 5-minute trend. Bears are hoping it's a little 5-minute bear flag. That will depend on whether or not QQQ hits a new low of the day, most likely. So SNC is getting, again, it's a Canadian ticker, SNC.TO, but it's getting follow through in a big way from that 1867 break. So nice job pointing that out. 2118 is the next resistance level. That is the key for the next couple days. Bulls hoping to go from a daily trend change to a quick weekly trend change as well. CGC bulls giving it another go. I need to see a break of 2060 with follow through if I'm going to believe the bulls. XLF trying to make its way to the high of the day, so has not topped out yet as far as setting a 5-minute lower high. Shop is all bears. On the 5-minute chart, just lower highs, lower lows. Anything under 324.28 is a 5-minute lower high. The daily time frame is close to breaking a key support. I'm looking at 310.80, 311.61, and 310.80 are very key levels because if they break, weekly lower high will be set. And we'll be looking back down at 286.07 support if those daily supports are lost. XBI still tight. SPWR, clear 5-minute downtrend of lower highs and lower lows all morning. Daily chart, bounce was just a short-term oversold bounce at this point. The bulls would have to hold 910 and break 1033 to try and change the daily trend. And for today, the bulls are just hoping to hold 943 support, the low of yesterday, to stay a daily inside bar. So low of yesterday's support is approaching. I like the CGC 5-minute time frame a bit more clear. If we do pull back from here, it will be a 5-minute equilibrium. QQQ fading back down towards the low of the day. If what you're watching in the commodity space is, as far as ETFs or trading vehicles, is not matching the underlying, the two likely reasons are: number one, your data is delayed, or number two, the underlying has switched to a different futures contract than what the current instrument is trading on, and that usually lasts a few days before they both line back up on the same contract. So CGC is setting up for that 5-minute equilibrium, as QQQ has hit a new low of the day. Let's see if Amazon is going to join. Amazon's testing its low. XBI is breaking its 2-minute equilibrium bearish. GIL GIL looking at a potential 5-minute bull flag. Very healthy consolidation at this point. Daily inside bar broke bullish over 27.54. And next resistance, if we do see the 5-minute bull flag confirmed, we're looking up at 28.30. So 28 and 28.30 is the next two key resistance levels. Google has been very flat since the open. Biotech bears not getting any follow through yet. So SPY down near the low of the day and QQQ down near the low of the day. We can say confidently that if XLF rejects from its high of the day and does pull back into 5-minute equilibrium, we will likely see another leg down on SPY. Pretty healthy consolidation so far for IAN, not really seeing a rush to the exits after the double top with the high of yesterday. So let's see if that XBI bear break with no follow through is a bull flag on a longer term time frame. Anything under 81.66 is just a 5-minute lower high. So Amazon about to test the low of the day, 1771.59. That just broke. And there was a bit of a laggard play there in the sense that QQQ broke its low of the day a solid few minutes before Amazon did. Now the question is, will we see any kind of significant bear follow through on that? New 5-minute lower high on Amazon resistance is now 1778. QQQ 5-minute lower high resistance is 194.15. So we have clear 5-minute downtrends on some of these tech names to be watching. But the financial sector still hanging on for the bulls. It's certainly been notable the past 3 days or so that both sectors have been going in opposing directions for a good part of the trading day. So patiently watching XLF. Remember, bigger picture now for Amazon with that 4-hour time frame giving us the clarity. We are going to be looking for a 4-hour higher low compared to 1749, so that's still a ways away. Still a good amount of space in there. SPY is still in an hourly uptrend at this point. We will have to see XLF weakness for that to change. BIIB certainly weak. 5-minute lower high set at 307.38. We're heading down towards supports. The only thing that I don't like is if you look at the 15-minute time frame, it's now been a solid hour of pullback. So if I were going to make a bearish entry, I would definitely be having a short-term mindset in the sense that I wouldn't be surprised to see a 15-minute bounce and lower high form sometime in the near-term future. So CGC is looking for a 5-minute higher low compared to the low of the day. QQQ is still seeing weak bounce attempts. So as far as clarity goes, we have 5-minute downtrends on SPY and QQQ, which are certainly clear. We're just waiting to see if XLF is going to give us this 5-minute equilibrium or be able to break the high of the day. Again, we'll expect another leg down on SPY if XLF does form an equilibrium and has to pull back for a 5-minute higher low. Let's see if Amazon gives us a 5-minute falling wedge. If these new lows don't get any follow through, that's when we know to be watching for the potential wedge. Definitely resistance on XLF just under the high of the day. Slow battle going on there. Let's see what volume looks like on SPY now that we have an hour of trading underway. SPY yesterday was one of the lowest volume days of the year. First hour of trading, we saw 5.8 million. Today, we're going to have about 4.8 million. A little more than that, but notably lower volume today than the past bunch of days. So we'll keep an eye on that as well. CGC bulls still within striking distance of resistance. XLF bulls want to prevent the double top here. Low volume is not a concern. What low volume tells me is, number one, don't trade as much unless an individual name is having high volume and its own volatility, then that's fine. But just as a general rule, I will approach a morning with more of a cautious foot on the brakes mindset if there is lower volume and tighter ranges, because that just means less opportunity. And it doesn't mean anything for the bulls. If we see low volume as we creep up, that doesn't matter. And normally on individual names, you want to see increasing bull volume on the way up, but it does not apply to the S&P 500 as a whole or for SPY. And that's something that I learned just watching the market since Trump was elected and seeing that all of these major bull moves and just slow fades, V-shaped recoveries and slow fades to higher highs have not needed bull volume. The bears definitely need high bear volume to see a pullback. So again, when I say it's not a fair market, in that regard, it's not. Bears have to prove it with volume and bulls don't. And that's just an observation from the last few years. And it took a little while to burn into my head because everything I've learned about technical analysis tells me we want to see increasing bull volume if we're going to have confidence in continuation and breakouts. And so I had to rewire that a little bit and say, well, not on the S&P 500. So CGC has broken resistance. It's not convincing in any way at this point, but the bulls will take it. We want to see the price with some solid follow through. XLF did break the high of the day by 1 penny at this point. So it could be a fairly choppy day. Again, when we have both sectors going in the same direction convincingly, that's when we get the most follow through and convincing action. When we have both sectors, and I'm referring to financial and tech, when they're going in opposite directions, then it's a bit more choppy in the short term. So we have to see QQQ change its 5-minute trend for the bulls for the S&P 500 to be looking up and potentially test all-time highs today, or we have to see the financial sector see a new low of the day if we're going to see the SPY bears get any significant follow-through. And if neither of those happen, then it might just be a choppy day. So those are the main things that I'm keeping an eye on in the short term. Can XLF keep a 5-minute uptrend? Is QQQ going to keep the 5-minute downtrend? And we'll see. So I'm going to wrap up the morning webcam. SPY, we're looking for a 5-minute lower high to form here compared to the high of the day. CGC bulls want another 10-cent plus of follow through. The more the better. Rest of the sector is not convincingly agreeing with the CGC bulls. There's QQQ getting a little bit more follow through. So both QQQ and SPY need a 5-minute trend change to shift short-term momentum. So I hope you all have a good rest of your morning. Lori will be live in 90 minutes. And I'll see you all this afternoon live, but I'll be back in the chat room in 15 minutes.